Okay, folks, welcome to another virtual RV rally. Today we have a great presentation on suggestions on how to control your risks through getting proper insurance. And I know this has been a topic that has come up on the forums often, people having difficulty getting insurance, people having trouble figuring out how to insure their vehicle for the value because the insurance companies don't understand RVs that well in some cases. And so we reached out to some friends in North Carolina, and they have an area of focus on RVs. So they're very knowledgeable in covering RVs with insurance all across many states in the US. Unfortunately, they can't insure Canadian owners, but they can certainly provide us with a lot of information as to what pitfalls to avoid or what risks to avoid in getting our insurance, how to make sure we're covered properly. And I know some members have an interest in traveling to Mexico. We may touch on Mexico insurance if there's sufficient interest. So thank you so much to Marty and his staff from North Carolina for joining us. And we're going to now introduce Marty Karriker. And take it away, Marty, and show us how we can be more effective in enjoying our RVing with good insurance. Thanks so much for coming.
I appreciate the invite, Doug, and good to see everyone here with us. We have Clark Harrell. Unfortunately, Clark doesn't have a camera on his desktop. He's the best looking of all of us, so we wish we could see him. And then we've got Hector up in the corner. He's been with me forever, and he's our bilingual agent. So if anybody habla español, Hector's your man. So there's a couple ways I thought about doing this, and I think the best answer is how to do this is to do it two ways. One, I'm going to show you a presentation. We're going to go through it quickly and answer. Maybe if you could perhaps write down a question if you have it, or raise your hand. In other words, I don't want it to get too long-winded or strung out, but certainly stop me if you need to ask a question, or maybe save it till the end. We can go back to that slide.
Marty, we can have them put their questions in the chat box, and then at some appropriate time you can take a break, and we will look at the chat box and answer any questions. Would that work?
Yes, sir. And Clark and Hector, if you see something in the chat box, if you want to respond to it, by all means, go ahead. And then once we look at this quick slide presentation, I'm going to wrap it up with showing you what I'll call a mock quote. Just a quick footnote, we're the agent for the RV Odd Squad, which is a different group in the US. You may or may not have heard of them, which is more or less how Doug and I met. I was going to show you more or less where my journey in the RV started. So this is me and my wife. This is November of 2019, when we thought we were going to buy an RV. We're going to travel the United States. Well, we were still engaged. We were to get married in April of 2020. And then something happened. It's called the coronavirus pandemic. We decided to scratch our plans to buy the RV and start traveling and just make, getting married our priority. So we did get married, but we never got our RV. So, however, in the process of looking for the RV, I went online and I started Googling RV living, RV lifestyle, same as you guys have probably done. And I ran across, the RV Odd Couple, and I started watching their videos, and I thought, this is pretty fascinating. It's teaching me a lot of things that I don't know, that I learning from other people's experience. And the video came out, and in that video, something was mentioned that triggered my insurance instincts to spark. And I said, no, that wouldn't have been covered. No, they're probably not right on that. So I reached out to them and I said, told them who I was. And I said, I'm not so sure you'll be covered for that. You might want to look at your policy. I'll be glad to look at it for you if you need help. So they sent it to me. Long story short, they were appalled at the lack of coverage they had, what poor quality it was. The reason is because they went through an insurance company's call center. They didn't have an agent relationship, which is hugely important. The call centers for a lot of these insurance companies are out to push a policy out They don't really get into the coverages. They don't talk about the choices and the options and the limits. And when I look at anything done by a call center, for example, if you were to go through, no offense to anybody who goes through Geico Direct, but if you go to Geico Direct, I can promise you your policy is very, very weak and insufficient. And unless you know enough to ask the Geico representative about the coverages and on your own increase your coverages. But anyway, so they sent me their policy. I marked it up and I sent it back to them and I said, this is where you're lacking. I said, now this is where you're not covered. Now don't take my word for it. Ask the company, because I didn't want them to, I'm not, wasn't there to sell them. I just said, ask the company. So they verified everything and they said, oh my gosh, this could have been a nightmare. Can you help our fan base, our followers, our squad? And I said, yeah, absolutely. So that's what I've done for the last year and a half. And we've written over, probably 1,500 to 2,000 policies at least in the last year. So in case of you are wondering, I didn't buy the RV. I still don't own an RV. I feel like I know everything about them, but I don't own one. So we decided that this is going to come a little bit later on when the pandemic's gone. The good news is I think I'll get a pretty good deal, because I think, and maybe not, there could be some buyer's remorse or people that maybe bought something quickly and there's going to be a lot of inventory in a couple of years, I hope. So I think I might be a good, but then again, maybe they'll be marked up and still be crazy high price like they are right now. But I will be an RVer at some point, maybe not full time, but I'm going to spend a lot of time in it. So we're going to start here with a presentation about RV insurance in general. And I'm going to wrap this up with walking you through a quote so you can see our style and how we do things at Charlotte Insurance. Charlotte Insurance, by the way, was an agency that I formed in 1992 and started from scratch, straight out of college, and it's pretty much all I've ever done is insurance. So in 1992, we're going on our 30th year, in 2022, of course. Now in 2017, I sold to a company called the Hill Group, and the Hill Group is a national agency. So the way that works, we sell, but they keep me on to run the agency and run an area, and so I'm still the agency leader and am responsible for running a profitable agency. I'm just now part of a bigger company, and which has been a great move for us. All right, so question. And I believe Doug shared with me there may be a lot of Class B RV owners in this group, and I don't want to assume anything. Everybody can still see the screen, right? That's got this big rig on there. Okay. So Doug said a lot of Class B owners, but I'm gonna go through this quickly. Short answer here. Can we insure these vehicles? Yes, we can insure these. This truck right here, we can insure it like an RV as long as there's a trailer that goes with it. If we were to not have the trailer with it, then this would go in our commercial vehicle, but we can pair it together and treat it as an RV. All right, heavy duty tows can be written under a motorhome product, but they both have to be written by Charlotte Insurance to make it acceptable. All right, why Charlotte Insurance? Well, first of all, we're recognized nationally as an RV specialist. We're only one of about a dozen agencies with one of our carriers that is recognized as an RV specialist nationwide. That comes with special underwriting ability. It comes with us being able to offer higher and more coverage than some other agencies and to make certain exceptions. So it also comes with additional expectations from the company and additional detail that we have to give to each and every customer. We have higher expectations of us as well. We're a full line insurance agency. Now, in case any of you have never been in insurance, so obviously there's 50 states. There's 2 licenses that have to be done in each state. One's an individual license, one is an agency license. Both of them are a separate process. There's 50 states, so technically that's 100 licenses. There's a cost to that. Long story short on that, we're dually licensed agency individually in about 30 states. Okay, not all 50. We're in about the 30 top states for RVs. There are the one-off RV in whatever state that's Rhode Island, for example. Not a lot of RVs in Rhode Island, but we do have 1 or 2 come across. We simply can't write those right now because we just don't have enough volume in Rhode Island. But as soon as we do, we get licensed in those states, and we send out a notification to those customers that we're available. But we're in most of the states. We're also part of a national group, which I just explained to you, which is the Hill Group. Why Charlotte Insurance some more? Claim service. There's a dedicated staff for the RV customers. In this meeting, there's 3 of us. We've got one that's not in this meeting today, couldn't be in the meeting, but we have 4, and we'll grow as needed. If you guys were to overwhelm us with RV requests, we'll hire more people. So they'll build it and they will come. That's how we'll do it here. But we have workhorse mentality. We like each other. We like our work environment, and we got great camaraderie. As a matter of fact, Hector, Clark, we're going to see the Panthers tomorrow. You guys be ready to do some tailgating, okay? We're going to have fun. We're Carolina Panther fans here. And we're all going to the game tomorrow. We got a dedicated staff for RV customers. We represent multiple carriers. And the biggest differentiation between us and your call centers is we care. I actually care. We develop agent-client relationships. I don't want Mike or Judy or Brandon or Doug to call me and say, did I get that coverage? Did I get enough coverage? Oh my God, this happened, and it be on my conscience. No, we work with you based on relationship and quality coverage. Now, once we do quality coverage, yes, we want to do it at the best price, but I don't want to sacrifice coverage to save $1 if you don't have to and we don't have to. Because when claim time comes, guess what? I've either had that conversation with you, and I'm going to sleep good either way because we talked about it, and you made a wise decision on what you want to do with your coverage. Okay. Different types of motorhomes, of course. There's the heavy-duty tow that we talked about. RV special. As an RV specialist, we're exclusively one of a dozen agencies can write these as RVs. There's also the professional and non-professional bus conversions. So I'm not sure if any of this applies, and I'll go through this pretty quickly, but you guys can take a snapshot of this or read it. If you have a question, just let me know. All right. We'll also insure toter homes as well. That's an acceptable motorhome, MH's motorhome. These are unacceptable. We won't do anything that's homemade. We won't do a bus or a school bus type conversion. Truck manufacturers like Peterbilt, Volvo, Freightliner, unless it's a toter home. Okay. There are other questions that people can ask that designates a red flag. We don't want you to sell tacos from your RV. We don't want you to give Botox injections from within your RV. There's things that can trigger that it's a business use, and we look out for those types of things. Okay. Also, motorhomes, when it's unless you're full time, we want to see another vehicle, that you have another primary means of transportation. Don't insure school buses. That we have had requests, people convert school buses. All right. These are acceptable travel trailers. Horse trailers with no living quarters, up to 50,000, utility trailers, and cargo trailers. We'll do that. Here's some more acceptable travel trailers. Any sort of destination trailer, whether it's a trailer or a fifth wheel. These are typically 39 feet or greater. They're on a trailer chassis, have 3-panel fronts. This is detailed stuff. I won't inundate you with this, but these are things as an agent we have to look out for. Okay, this is also acceptable. Stationary are acceptable if all the following apply. Now, if these don't apply to you, maybe I'll just skip this section because I don't want to get into too much detail, but just know that we'll do this. If you look like this picture, we can do it. All right, unacceptable is whenever you've got you can pull up to a deck as long as it's not attached and as long as you're able to move your RV. Otherwise, it would be unacceptable, especially if this is a permanent awning, as you can see, over a deck. This would be unacceptable. More unacceptable, tiny homes, which is becoming popular in a lot of places, is not an RV. And you can't put an RV on a flatbed either. So it could be a toter home, but it can't be on a flatbed. Okay. Again, more unacceptable things. We won't get into much into that. Keywords we listen to for things that are unacceptable. Okay, as an RV specialist, we're able to do some things, and I'm going to show you this when we actually do the quote. For those who need to schedule personal effects, we can schedule things. So this is especially important for full-timers. If you're living in your RV full-time and you need to schedule your jewelry, guns, bullion, anything that you need to schedule, we can do that. And we'll get into the requirements of scheduling those, you know, on a one-on-one basis. We also have the ability to go up to $1 million for motorhomes, which is a lot more, it's a lot, the bigger, more expensive motorhomes we're able to do where most agents aren't. If you call 100 agents, you might be lucky if one of them can do that $1 million motorhome. We can do total loss replacement costs on the higher end ones. Again, this mostly here speaks to the higher end things we can do. Now, quickly a quick lesson on the rating base. This is one of the most important factors. And what is the rating base? The rating base is what you paid for the RV, including tax, tags, and titles. It's basically what you're into it out the door. Now, you got a sweetheart deal. The RV's worth $100,000 on NADA, RV, all the RV websites. But some guys desperate sells it to you for $50,000. We can still insure it for $100,000. Normally, you're going to pay market value. That's normally what we do, right? So, but if you do get a deal on it and you get it for much less than what you wanted insured for, as long as we can justify that, yeah, this is a $100,000 RV. He got it for 50, but it's $100,000. Here's the comparison. Here's an appraisal. Here's the comps. We can still do it for $100,000, but we have to establish the rating base, which is what it's worth. We can do 3 types of settlements. We can do agreed value. This is the value that we agree upon, and the customer pays this amount regardless of depreciation. That is what we'd settle for. For example, you've got a 2017 that is worth $100,000, and that's what you think it's worth, and that's what you can justify. We can do actual cash value. So today it's worth $100,000, but then next year it's worth 90, and next year it's worth 80, and next year it's worth 70, and it goes down. That's actual cash value. Okay. We can do agreed value. We can lock it in at $100,000, and that'll last for 10 years. And at that point, it falls off to the actual cash value. But we can at least keep that value up there, especially the RV prices are going up. We can keep it at the agreed value for 10 years. Total loss replacement. This is the preferred choice for any new rig. Basically, what happens is, and we're going to take in consideration the purchase price. This is mostly for newer rigs, permanently attached equipment, dealer options, tax, title, and registration fees. And I'm using the example of $100,000. You get into an accident, it's totaled, it costs you $110,000 to replace it. We're going to pay $110,000. We're going to buy you a new untitled RV. If your model's no longer available, we'll buy a similar model to match what you had in your same class range, new, untitled. And when it's new and untitled, that means it could cost more because of the cost of inflation. The RVs are going up, so that's your best option for the newer rigs. As far as the rating base, how do we get it? If you're unsure, what's it worth? What'd you pay? Do you have a bill of sale? So there's ways to find the rating base, but typically it's what you paid for it. That's typically what we go by, unless somebody got an extreme deal situation. Total loss replacement, we touched on that. Available on newly purchased RVs for current model year and 1 year prior. Must be original owner. I'll put an asterisk on the original owner. We do have a carrier where you don't have to be the original owner and you can still get total loss replacement costs. So I should modify this line right here. And this is what I just touched on. We'll replace the RV with a new one in the first 5 model years in the event of a total loss. Okay. We consider the total loss replacement as your dealer options, taxes, tags, and everything. So all in. All right. Touched on agreed value and actual cash value. All right, the garaging address. We need to know where the vehicle is being used and stored. Now, Doug, you mentioned Canadian. Doesn't matter what country or where your license is from, as long as it's domiciled and registered in the United States. So I was talking with Clark about that last night. And if you have a situation where you have someone whose primary home is Canada, but they have a relative in the States, in one of the states we're in, then they could register it in that state. They don't have to be a U.S. citizen, but we could still insure it in that state. So that's how we would get around that. When I say get around, that's how that would make this acceptable.
When you say the U.S. resident has to be the person who lives at the U.S. address.
Right.
Okay.
All right, we're going to get into some coverages now. All right. There's a couple things that are unique with some of the coverages we can do. For example, we've got one called Roof Protection Plus. Roof Protection Plus is something that I'll show you when we do the quote. We can add it to vehicles up to 5 years old. Again, I won't go through every little detail. This is also a training video for our agents. So I'm going through it kind of fast out of time, but we can do roof protection. We got limits. We can go up to $15,000, and I'll just touch on it. Here's a difference in our roof protection and normal roof protection. Insurance is designed to cover things that are sudden and accidental. So if a tree limb falls on your roof, a hailstorm, things that happen suddenly, an instant, those are covered under comprehensive. We have something called roof protection. With our roof protection, it expands the definition of coverage to general wear and tear. So if you notice a leak coming in your roof, your walls, your floors become wet, we'll cover that up to $15,000. Okay, that's one of the unique coverages we offer. We also offer pest damage protection. This is more common with part-timers who may have their RV stored somewhere, especially if it's in grass. They tend to become infested with different types of vermin. We cover that damage as well, whereas some carriers don't do that. And all right, we also have coverage for personal effects. Personal effects are the things that you carry on the inside. This is your stuff. These are the things that if you took your RV and you turned it upside down, the things that would fall out. Okay, dishes, clothes, laptops, cell phones, and things like that. We can go up to $99,000. We'll pay up to 100% for those items with no depreciation. We also have roadside assistance. We'll tow you to the nearest qualified RV repair center. We're not going to tow you to the side of the road or to the nearest gas station. We'll take you to where your RV needs to be repaired. Okay, and no cost out of pocket with that. This is a throw-in pet injury. We'll pay for certain things for your pet up to $1,000. We can get into that if you have a pet. Emergency expense. This is a big benefit. We can go up to $7,500 for full-timers. We can go up to $2,000 for part-timers, actually $3,000 with some companies. But this pays for temporary living and transportation expense when a claim is made. So if you're in your RV and if you're full-time, it doesn't matter where you're at. If you're part-time, you have to be 50 miles away from home. But something happens, now it's in the shop, you're 500 miles away from home, you need a hotel, we'll cover that while the RV's under repair, up to your limits. We have full-timers packages, and I can get into this. This is your coverage that provides homeowners-like coverage. Full-timer packages will cover you when you're camping or boondocking. Basically, motor off, you're setting still, you're set up, something happens in or around your RV. For example, somebody trips on your wood pile and breaks their arm, or they gash their head on your awning, or trip going up your stairs, or your dog bites them. This is where the full-timers package comes into play. Think of it like your homeowner's insurance that will cover you like a homeowner's policy while you're in your RV. Windshield and glass, we have in some states, not all, but more than not, we have what we call full glass coverage for the windshield. Any motorhome, especially Class A, the big windshields, those are very expensive. We can put a zero deductible on that and cover that for you, which again, we see that played out a lot when customers have that windshield broken. Do you have any questions before I get into the quote?
Okay, we did have one question from Joe. She's wondering if you could cover Volkswagen Westphalias for their true value.
Volkswagen,
Westphalias, that's the one where the top of the roof of the VW van raises up and creates a camper.
okay,
And I would say implied in her question is that these are kind of a classical collectible type item these days. So their value may be a little bit influenced up by that category.
let's take a look at it.
Hey, Marty,
Yes,
I looked it up in both Progressive and National General. I don't see it, so that'd probably be a call we'd have to make.
okay,
I looked under both carriers and I couldn't find Westphalia. I did look it up. It's a cool vehicle, but I don't see in National General Progressive where it will be covered. So that may be a call that we'd have to make.
okay.
Joe, do you want to come on and just clarify your question? I'm assuming that part of your question is that these units are likely valued higher because they're a collectible classical vehicle. Is that correct? So you're wondering about the enhanced value because of that reason?
Yes, they are definitely higher value than what they are NADA for, and they have camper setups, and some people like myself sometimes have a little toilet in there, so I think sometimes that allows you to call it an RV. It is an RV anyway. It has bed and has propane stove and water, and just doesn't have the tanks. And yeah, so but they're valued way higher than what the NADA is.
Okay, thanks. That just clarifies it for Marty and Clark. Also, Marty, you showed the photo of the fifth wheel being pulled by a larger truck, and commented that as long as they're hooked to a trailer, you can insure them as an RV. So if I own one of those and I unhook the trailer at the campground and start going sightseeing in that truck without the trailer attached, does that risk me with coverage, or am I still covered okay?
Okay, that's actually a very good question. And I'm gonna say it's only gonna cover when it's attached to the travel trailer, but I'm gonna confirm that. Clark, do you know if it has to be attached to the travel trailer? Well, here you go. Heavy duty can be uncoupled from the trailer only for maintenance or refueling.
Another question is from Brandon and Kelly. For roadside assistance, who do we call? They had Good Sam, and they had a bad experience 2 weeks ago with the call center. So if you're covered with your policies, where do you call if you need roadside assistance?
So Progressive has their own network, and you would call them. And I can testify, this is a true story. So John and Mercedes, the odd couple, they were doing a video. This particular video, I think he was teaching Mercedes to pull the fifth wheel. So John's in the passenger seat. They have a flat in their travel trailer. They pull off on the side of the road. He texted me. Now they were tied up in filming and all that, but they texted me and said, Marty, we have a flat. Who do we call? And I gave them the claims number for the roadside assistance with Progressive. They called the roadside assistance. Roadside assistant, and he took the conversation and made it part. He put his phone up and made it part of the video. Anyway, roadside assistance with Progressive just so happened to be on the same highway going in the same direction 5 miles behind them. So when the call was dispatched, they were there in about 3 minutes. So it actually doesn't always work out exactly that quickly, but it looked really good because they were there within less than 5 minutes from his phone call because they were already headed that way. And then he filmed the guy plugging the tire and getting it all fixed up and everything. But short answer, you call Progressive, and they'll dispatch roadside assistance for you.
Okay, thank you. Any
All
other
right.
questions before Marty moves on? If so, come on and ask it.
And going through this quote might trigger some questions as well.
Okay, go ahead then, Marty.
Okay, so we have Mickey Mouse as a customer. He has an RV, and this is actually the address for Disneyland. I looked it up this morning. So this is a sample quote. Anybody have one that they'd like to see quoted here? Okay,
Yeah,
what you got?
Go with a 2000 road track, Dodge road track.
Yes.
Dodge road track. Is there, let's see, road, let me look at road track.
There you go.
Road, there we go. Okay.
Yep.
Which one is it?
Versatile,
19.
Okay. And you purchased it when?
2016.
Okay.
That's not what it is.
Vehicle
Purchase
purchase
year.
year?
Yeah, that's correct.
Okay. And then what would you call your, now this one might be a little old. We got to look if we can get a great value on that. But what's the value on this one?
Well, value is likely 28 to 30,000. Say 28.
Hey, Marty,
Yes.
hey, do original owner erase that, put no, and see if it'll populate a number.
No.
There you go. Nice job, Clark. So the ACV on this is 14,250.
Yeah,
Now-
that's nowhere even close to double that.
Right. Well, this is where we can get possibly an agreed value of 28,000. But you would have to prove the value of that. We can go over this by 25% without underwriting approval. But if you want 28,000, which would be doubling it, we would need to get a recent purchase order, bill of sale, or an appraisal. Okay.
Yeah,
then we can
you get, might take you a while to find 28, but put in 25. That would be an easy find at 25.
Okay. Now, underwriting questions. You're not using it commercially. You're not renting it out. You're not taking it to and from work like your primary vehicle. In other words, you have another vehicle to do that. It's not your only vehicle registered for house use. Now, if any of these are yeses, it changes things, but generally speaking, we look at RVs for pleasure, and so these are most often no.
Okay, so that brings up a question about rentals. If I have my unit and one of my neighbors or one of my friends wants to rent it for a week, what are the implications of that?
So when I say here, is it rented out to others? Yes. Then a lot of times it'll kick out these carriers from, and this is something I struggle with too, because I think there's people that probably rent their RVs through a company like RV Share, but don't disclose it. It's kind of like the old Cleon from Hogan's Heroes. I don't even want to know. I don't see nothing. I hear nothing. If you're doing that, then I'd rather not know about it. And I'm not suggesting that it would be covered or wouldn't be covered, but what I do know, and I've done it twice myself, I've rented RVs from RV Share. In both situations, their primary insurance was with carriers that I worked with. And in both scenarios, had they told those carriers that they're renting out their RV, there would not be coverage. So what happens when I rented these RVs, I had to sign all kinds of things, and I had to purchase insurance through RV Share. And from what I understand, RV Share has, whenever you put your RV in their program, they are covering the liability insurance and probably the physical damage for that RV. So if I rented an RV and if I was in an incident, it's going to be covered under the policy that's done through RV Share while it's being rented. Now, the RV gets rented, you get it back, nothing happens. Nothing happens. I'm not, again, so that's kind of one of those things where, and the reason I've struggled with it is when I get my RV, maybe I want to put it in RV Share. What do I do?
Marty,
Yes.
hey, Progressive now in a lot of states, maybe all states, when you get to the very last page, you know, you're putting in the payment info, so on and so forth. You can now rent your RV out if you're insured by Progressive, but it has to be through like RV Share, Outdoorsy, and
Okay.
you can't have purchased that RV for the sole purpose of renting it out.
Right.
Meaning, okay, I use it for pleasure, I use it a lot, and then, you know, when I'm not using it, I rent it out. You're allowed to do that with Progressive now.
Okay. Well, there you go. Thank you, Clark. Hector, did you raise your hand? Okay. So, for the sake of this example,
So answer no to the rental. That was just a one-off thing if my neighbor wanted it. It
yeah,
wasn't
right.
meant
So,
to take a rental unit out of it.
so on that note, I will say this, and you can loan it, rent it. I mean, loan it. He gives you a personal check, whatever. I mean, that's neither here nor there. You can have a friend, neighbor drive it as long as it's incidental. You know, I thought about when I get my RV, I'd like to bless my pastor with a week a year with the RV, and you know, so how would that go? And I called the carrier. That's fine. It's incidental. Okay, that's different than an RV share.
Okay.
All right. So, all right. Do rent out to others. We'll say for now, no. All right. Again, these are discount questions. If it has anti-lock brakes, there's a discount. If it has anti-theft, like even the ring video type thing, or window identification system, the etched VIN number. There's other things here you can get that discount. These are discount questions. Airbags, you know, some of the motorhomes have airbags. Obviously, fifth wheels won't have an airbag. And by the way, when we do this, we've got products, so we can add your auto, your motorcycle, a boat. We can do all kinds of products here. We prefer to insure a motor, so we're either going to do the motor home or we'll do the fifth wheel with the tow vehicle on the same policy, because you would have one, in the event of a claim, you'd have one claims adjuster, one deductible. You're not going to have company A pointing the finger to company B. No, your coverage. No, it's your coverage. They're not going to fight with each other on who pays for what. So we prefer to have the tow vehicle if we're doing a travel trailer. And if you're doing a motorhome and you're towing a car, you know, we like to insure that car that it's towing as well. We'd like to insure all your cars, but at least the one it's towing.
So Marty, is this something that if I were to go to your website, I would find this and fill it in to do my own quote?
No, I'll show you what you'll find on the website. And
Okay.
so I'll kick this in a little bit higher gear and go a little faster. Again, discount questions. We let lien holders here. All right, under the household members. Oh, by the way, that was a message saying that 25,000 is greater than the normal value. And I just said, okay, we know it is, but we're going to ask for it anyway. I never could figure out, is Mickey Mouse and Minnie Mouse married? I struggled with whether to put them as married or single, and I don't know. So I listed them as single. But I've got 2 drivers in the household, and I gave them, you know, Minnie's younger than Mickey by a day. Social Security numbers are, it can enable you to get a better score or better price if the credit's good. It's not required though. But if you have good credit, we put it in, then it X's it out, and it's called a soft insurance hit. And it doesn't affect credit. It just enables you to get a better score. All right, so we've got valid licenses in Florida. Of course, we don't have license numbers. They've both been operating total RV experience individually, 25 years each. We give a discount if they've taken a senior driving class, if they're 55 and older. We could say yes or no to that. The certificate may be required. All right, under additional details, have they had it in the last 12 months? I'm going to say they did through, you know, I just picked a company, American Family. It renews 10/1 because again, we're shopping the renewal. USAA, if they're ex-military, part of the USAA, they'll get a discount for that. We're going to go paperless always these days. We are saying here that they still own a home. Now, if they don't own a home, we just say Oh, I think I listed this as part-time. That's why I was asking that question on a different screen. So the RV would be, if it was full-time, the question would be RV only. Okay, but we're going to say they own a home. All right, we have no other risk at this time. So now we're going to get into coverages. So, and by the way, whenever we do a policy for somebody, I do a screen share just like this, and I go through the coverages to explain everything to the customer so they know exactly what they're buying. And the general presentation goes like this. This is low coverage. This gets into medium. This gets into medium, high, and high coverage. We can go up to $1 million of liability. This is called split limit liability. Split limit liability, that first number is per person. That's per accident. Okay. Most people, there are 3 out of 10 people that don't have insurance. That means 7 out of 10 have insurance. Of the 7 out of 10, most of them have really low coverage. So you're either facing somebody mostly with really low coverage or no insurance at all. What we typically suggest is 500,000 combined single limit. Let me show you the difference. Let's say you've got 5,100. That means that it'd pay up to $50,000 per person for their injuries, not to exceed $100,000 per single accident. Not a lot of coverage when you get attorneys involved, especially if you hit somebody with something carrying a lot of weight behind it. Now, your uninsured motorist, whatever we do, we match it. So in this case, we'd match 5,100. But what I'm going to suggest to people, again, we sell on coverage first at the best price. So $500,000 is what I normally recommend. And everything we do, there's a price here on the side, and we can recalculate it. We can shift it. We can change it. We can do whatever you want to do as the customer. And then you ultimately you pick. But $500,000 CSL, that stands for combined single limit. The difference is under CSL, there's no limit per person. The only limit is $500,000. There's no limit for property damage. It pays up to $500,000. So with $500,000 CSL, you got a bucket of $500,000 to help you settle the claim, or $300,000 or $1 million, whichever you choose. All right. Always make the uninsured, underinsured the same, because I want you covered for the same limits that you're covering other people, because of if one of those 3 out of 10 hit you, you need to have good coverage. You also need to have the underinsured part in case they have coverage, but not enough. Okay. Now, I'm going to be honest with you. I'm not going to get in a whole lot of PIP definition. PIP is personal injury protection. The reason is the definition is different in every state. This little itty bitty paragraph right here sometimes takes up this whole page when I click on the PIP definition. It's different in every state. What I will tell you is that I am a big fan of MedPay. MedPay benefit in some states goes up to 25 and even 50,000. I'll generally do 10,000. The reason I like MedPay is this, because I see it pay out a lot. MedPay is an indemnity benefit. That means that it will pay on top of and in addition to any other insurance you have. So most of us have primary health insurance. But if we're interested in an accident, we take those receipts, we turn them into the company, and the company reimburses you for x-rays, ambulance, medical bills, medicine, rehab, whatever it is, they reimburse you. You take that money and you pay for your deductibles, your co-payments, your co-insurance, whatever you need to pay, or you put it in your pocket. Had a family of 4, had $5,000 med pay, and all 4 of them went to the hospital. All 4 of them exceeded $5,000 in expenses. Gave them a check for $20,000. And this family really needed it. They weren't, they needed it. And I felt good to give it to them. So, all right, in this particular instance, actual cash value, and we're going to go with agreed value because we put it at 25,000. Okay. So you notice it flips these deductibles to agreed value from actual cash value. All right, the deductibles is a personal thing. Most higher end, 100,000 plus rigs, people will tend to take higher deductibles. To me, it totally doesn't matter. I don't care what deductibles. That's up to you. Most people settle in 500 to 1,000. Create it. If it saves you a little money, go higher. Get you a deductible fund, but that's your deductible for comprehensive. Now, in some states, obviously not in Florida, we have a little tag over here that says FCG, which means full coverage glass. It's not available in Florida, but in some states, we can put a deductible on the comprehensive, except with the FCG endorsement, there would be zero deductible for the front windshield. Okay.
Hey,
And that
Marty?
means, yes.
In Florida, glass is automatically covered. That front windshield is automatically covered in the state of Florida.
Yep. Good one, Clark. Nice pickup. I forgot I wrote Mickey in Florida. Nice pickup. All right. There's a benefit called emergency expense. All right. And for part-timers, the max is $2,000. For full-timers, it's $7,500. What the emergency expense does, it pays for lodging and transportation. Again, I mentioned that in the slide. If you're put out of your RV because of a covered claim and it's in the shop, it'll help cover your living expenses while your RV's in the shop. Okay. Vacation liability. If this is your homeowner's policy, I touched on this in the slide presentation. This is like your homeowner's policy, and you can go from 10,000 to 500. I'm going to show you the difference between what a difference an agent makes here in just a second. You'll see it. Personal effects. This is your loose items. These are your low end items. I'd say anything less than $1,000, clothes, dishes, a grill, things like that that's inside your RV. And the reason I say less than $1,000, because we sort of have a rule of thumb here. If it's more than $1,000, you want to schedule it, because this caps out under this personal effects. It's categories. Some things that'll pay up to 500, some things that'll go up to 1,000. I just say as a rule of thumb, if it's over 1,000 and you really want the money back for it, like a $2,500, $3,000 computer, if you really want it covered, let's schedule it. So we can schedule. If we schedule it, we just need, I've got a spreadsheet template I can provide. You just need to spreadsheet it out and have a picture and a receipt or a documentation of the cost of it. I'll help you with that if you need scheduled coverage. Don't worry. Secure personal effects. This is your items in storage. Since I wrote this as a part-timer, it's not available. Full-timer, secure personal effects. So let's say you sell your home and you go full-time. You've got beds, dressers, all that kind of stuff. You got it in storage. You can buy that from the storage facility, or you can get it from us right here. All right, roadside assistance. That's what we talked about earlier. Roadside assistance will pay for towing to the nearest qualified RV repair center. It's going to cover, sorry about that. I installed this new program over here. It's anyway, every time I click on something, it pops up. But it'll tell you to the nearest qualified repair center. It handles winching services, which will pull you out of mud, snow, water, or sand, as long as the cable can reach you. It says within 100 feet of the road, but basically if the cable can reach you, it'll pull you out. Towing, battery jump start, fuel delivery, trip interruption, which means it'll pay for, if your RV is under repair, it'll pay for $100 for lodging under this little benefit here and give you $50 for alternate transportation. This is your roadside assistance. And again, I've never had a complaint from a Progressive customer. All right, that sort of starts to wrap it up on this one. There's a few other things here that's not available. We talked about it in the slideshow, the pest damage protection and the roof protection, because this is a 20, what model did we say, 2000?
Yeah.
Yeah, it's only available for newer rigs. That's the pest damage and the roof protection that we talked about. Trailers throw in at $2,500. All right, so this one would be $1,000, $1,051. So the way the portfolio looks is like this. Got Mickey and Minnie Mouse insured for $1,000, agreed value $25,000 with a $500,000 liability. And then there's one other thing we do here. Excuse me, we do it this way. I'll generally open up the quote. I can email it to you. We can, it's kind of laid out differently. This is more of a summary of what we picked. It's a 12-month policy. Road Trek Van Camper Series. We've got a value of, we said that you're in it 30 to 150 days a year. We've got $500,000. We've got the personal injury protection, the agreed value of $25,000. Everything we just went over, medical payments, replacement costs, vacation liability, it's all here. You can pay it in full, get a greater discount, or there's payment options available. And the payment options are, you can go 91 bucks and $92 a month. You can pay it in full. Save a little money by paying it in full. So this more or less wraps up the presentation of, and I went through it fast. I'll stay on the phone for an hour with a customer doing this quote if I need to, so that they completely understand it. In this example, if somebody says, well, can I add my auto? Yeah, we can add your auto. We'll go ahead and add the product. Now we've got an auto and a motorhome. So we'll make that one effective today. And then we just, this is kind of funny. This pulls in with the DMV and it's associated to that address. So it looks like Mickey Mouse has a 2021 Chevy in the house somewhere.
Marty, we got a question here. And I do believe vacation liability only refers to somebody who's full-time, but Brandon and Kelly are asking if you can just review that quickly again.
Yes, vacation liability is actually specific for somebody who is part-time. Okay, if they're full-time, it's called full-time protection. It's the same coverage, except the full-time protection has a few other bells and whistles that goes with it. But the vacation liability is for part-timers. The full-time liability is for full-timers.
Okay, and presumably vacation liability is a little cheaper because you're not on the road so many days is the assumption. Yeah.
That's right. That's right.
Okay, well, thank you very much. That's quite an exhaustive spreadsheet you've got there to figure out the rates, and it's very clear cut in terms of selecting what you want, and you've explained the different options very well. So do we have any other questions of Marty? Well, everybody must be happy. You've covered it very well if there's no questions.
Yeah,
Okay.
really good job. Really appreciate that, Marty. I'd like to schedule some time to go over my insurance options with you.
Let's do it. Let's do it. Send me, let's see here. Mine's easy, Marty, M-A-R-T-Y, at charlotteinsurance.com.
And you use the company Progressive in your examples. You're actually looking at lots of different insurance companies though, and trying to find the right or the best package and coverage.
Right. Yeah, we're an independent agent. We've got 5 carriers, primary carriers that we use. National General, Progressive, Nationwide, Foremost, and Safeco.
Okay.
Most of our business is going probably 50-50, maybe 55-45 between Progressive. Most of it's going to Progressive and National General. We're trying to come on strong with Nationwide. They're relatively new with us, and Nationwide are working out a few kinks, but we do have, we've got Foremost has a program for stationary RVs, so we've got a lot of flexibility.
Okay, good. Yeah, I'm currently with Progressive, but I had no idea what I was really selecting when I picked my policy. So it'll be good to understand what I.
Well, we can write your, if you have Progressive right now, I would say you got Progressive, and then it asks, why are you leaving? And we say in this one, it's reason not listed. Up here, it actually would say moving from Progressive Direct. Basically, what I'm telling you is that you can move from Progressive to us, and we can become your agent. And then what I do with that is after we write the policy, I stay on the phone with you. We call Progressive together, identify myself as an agent. We're a priority agent, so they give us top attention. And then I identify that, Brandon's on the phone. You give them your policy number. I say, we just bound this policy. Here's the number. And then you give them your old number, and they cancel you right on the spot, process your refund, and it comes back to you.
Okay.
Yep. We do that all the time.
You may want to turn off your screen sharing so we can see you better when you're answering, Marty, and also the questions. Marion is asking what is covered on her progressive policy for a 96 road trek with the limit of, quote, the lesser of actual cash value or 25 when it sells for about 20,000. So the answer to that, I think, is if it's the cash value and the lesser of cash value or 25, the lesser would be 2,500. So I think she's got a bit of a crack there in her coverage, but maybe you can comment in more detail.
Oh, it's definitely the lesser, because if the cash value, did you say 2,500 or 25,000?
It's worth 20,000, but the term she's quoted here is lesser of cash value or 2,500. Well, that would mean she's going to get 2,500 on a $20,000 vehicle, wouldn't it?
Lesser of cash value. Clark, what's your opinion on that? I would think that on that, and again, we could clarify that as well. I think the minimum would be 2,500, but they would probably they would do cash value with a minimum of 2,500. Clark?
So what it sounds like to me is they have a value in there, but it's rated for actual cash value. So if you have $20,000 in there and there's a total loss, I mean, they may pay you less than the $20,000 if that's the actual cash value at the time of loss. That's why we tend to stay as far away from ACV or actual cash value as possible. We want to do an agreed value or a total loss. So it sounds like you might have actual cash value on your vehicle versus like an agreed value where they pay that agreed value amount. But if it's actual cash value, they're going to pay you what it's worth at the time of loss.
Well, so the first thing we would do, if we wrote it, we would write it for an agreed value because of the age to eliminate that altogether.
Yeah.
Now, what
Okay.
that speaks up today, I copied this quote and I'm going to send it to claims and find out, is it the lesser of 2,500 or I'm going to say that it's going to be the actual cash value. If the actual cash value is 5,000, they're going to give her 5,000, not 2,500, but they'll give her at least 2,500. So, but who wants 2,500 if it's worth 5,000 or 8,000 or 10,000? You want the cash value. That's the way I'm interpreting that. But still, we should look to get her an agreed value.
Marion, do you want to just comment?
Okay, I'll just pop in here. What I see is that it's a problem with, this is basically a classic vehicle. And so it gets into a whole different pricing range than what you'd get with just going and buying a new item.
Well, that's why, again, that's why it's even more important, in my opinion, that you get an agreed value because of what you just said. And the agreed value could be supported by any sort of documentation, whether you just purchased it for that, whether it appraises for that, whether it's listed online under RV Trader for that amount, a similar vehicle. We just have to prove that that is the value of that vehicle. We can insure it for the agreed value.
Okay, I think that clarifies it for me. You have to determine an agreed value.
Yes.
So Marty, you're a progressive agent. If she reaches out to you, I'm sure you can help her get that sorted out, eh?
Yes, absolutely.
I have a question, Marty. I tried to add my e-bike to a foremost policy, and they came up with some crazy numbers. I could have bought the bike 3 times with what they were asking. I got the feeling that they weren't really quite ready to handle that question. From your experience, my e-bike, by the way, costs $1,500, and it rides on the back of my RV. What is the situation currently with trying to add an e-bike to a policy?
Clark, you did that just the other day, didn't you, with e-bikes?
Yes, like Progressive, National General, even Foremost told me they would. Now they did say, I mean, depending on how self-propelled it was, is it pedal assist or whatever, they will not cover e-bikes because it's motorized. So we have a company called Markel, M-A-R-K-E-L, because I had a lot of clients that have e-bikes. and we couldn't cover them. So I was looking for solutions, and I found this company called Markel. So we could send you their link, and you can, like, you know, to do your quote and see how that shakes out versus, you know, what Foremost was trying to offer you.
Any other questions before we call it a day? That's a great presentation, Marty and Carl. Really appreciate all the time you took to prepare that, and you've covered it in very great detail, and shared with us the importance of having an agent who will give you the coverage you need without any cracks being there to cause you headaches. Looks like people are having to go. So one last call for questions. Hearing none, thank you again, Marty and Carl. We appreciate this opportunity to learn more about insurance. We have the screen with your contact info, which we'll be posting on the Road Track forums. And hopefully we can share this video for those who weren't able to attend. And thank you so much for joining us today. And next month, folks, we're hoping to have a presentation by Harvest Hosts and Boondockers Welcome. They're putting out a new website in October, and they're just trying to find someone on their staff who isn't timid of going in front of the Zoom camera. So we'll look forward to seeing them next month if things work according to plan. So great to see everybody on here today. Thanks again, Marty and Carl, and we'll call it a day.
Thank you.
Appreciate
Very
it.
helpful.
Thank you.
Bye-bye.
Bye-bye.
Okay, thank you. Bye-bye.
Good job. Thank you.